Well, it's that time of year again. If you're a QuickBooks user, you may have noticed your bill creeping up steadily, and you are not imagining it. QuickBooks Online has increased their prices multiple times over the last few years, making the old prices look completely different to what they are selling the software for now. And you might be wondering if it's still worth it for you to continue with QuickBooks. And that's what I'm here today to talk about. And the answer is not going to be the same for everyone. So we're going to talk about what these new price increases actually are, and who needs to think about switching, and what you need to consider before you make the move. And I'm going to give you my honest CPA take on who maybe doesn't need to switch and who should stay and who might want to look at other options. So first and foremost, what exactly is changing? So this was sent out to accountants recently who have clients on QuickBooks, and it showed what the new prices are going to be. I'm going to go ahead and put that on screen so that you can see it and look for your specific subscription level. Now, you may not have gotten this email yet. It depends on what your subscription timing is, but ultimately these are supposed to take effect in August of 2026. Now, one positive thing this year, I will say, that hasn't been the case in previous years, is that the lower subscription plans are largely unaffected. Now, most of you are probably not on the free plan. That is not a plan that I typically recommend. There's really not a lot in terms of features, but some of you may be on Simple Start. And if that is the case, you're not going to have anything change from the perspective of pricing. However, if you're on Essentials, Plus, or Advanced, that's where you're going to see these pricing increases. And those prices are going to be increasing 13%, 22%, and 24% respectively. And yes, I know we're living in an inflationary economy right now, but inflation is not 24% last I checked. So these seem like they're more than just inflation adjustments. So your next question might be, am I getting anything additional for this increased price? And here you can see on this article, which I will link below, it goes into what is changing, and there are some new features rolling out. So you can see it says here, we've listened and your feedback has shaped what we're building. In the upcoming product release, we address some of the top friction points you've flagged, such as more reliable bank feeds, good, faster load times to accelerate your productivity, and improved usability to streamline the work you and your clients do every day. Again, this is kind of geared towards accountants, but this also applies to those of you who are just using this as a base user. And of course, with every product update, we're getting more AI. So that is woven throughout here. You can see this new Intuit Intelligence, which they're rolling out in multiple different facets. And you can actually read quite a bit through what is actually changing. So you can read about what's changing with bank feeds. If you come down here, there's more on invoicing, right? So some of these things are just improving some of the functionality that already exists within here, making things a little bit easier. Now, I would argue that most of this stuff really we're just improving our current existing features. So is this really worth an additional price increase? And so let's keep reading to see if there's anything else. We've got more auto categorization. We've got some reporting shifts that you can read about a little bit here. I'm not going to go through every single thing because that's not the point of this video, but definitely take a look to see what does it mean when we're talking about business intelligence. Again, anytime they capitalize intelligence, it's usually because they're talking about some form of AI. Now, one thing I do like here is that it talks about rolling out KPIs and dashboards to Essential and Plus clients, which I think is useful to be able to see more analytical data about your business, not just the history and the accounting pieces, but also looking forward. So hopefully that's something that will be helpful to people. And it also goes through what's changing for QuickBooks Online Advanced as well. So there are changes that are happening. They're not just rolling this out and saying, tough luck, here's your price increase. But whether this is going to be actually something useful and worth the additional price is going to depend on the individual business owner and what they're actually utilizing. Now, I'll be sure to link that entire article below so that you can read through what the changes are yourself and determine if any of the new features are things that you would be interested in and will use. But I will say that one issue that I have with the fact that they're increasing these prices is that they've really been trying to drive people towards things like QuickBooks Plus or higher higher. I actually did a video about this last year where I talked about QuickBooks getting rid of a lot of the great features they had in those lower packages that had things like tagging that would allow you to do essentially class tracking for different divisions and things like that in your business. And they pretty much overhauled that in order to get more people to sign up for QuickBooks Plus, the higher level, which is now the only one that comes with class tracking. So you have to be in that or higher in order to have real true class tracking now. And so this was a big issue for me. I use class tracking a lot. I don't use a lot of the other features within QuickBooks Plus. I don't need inventory because I don't have a product-based business. And so really I was paying for this higher level specifically because of one feature. And for that reason, QuickBooks Plus has been the level that I recommend to a lot of business owners who are signing up for QuickBooks. But now that price is going to be going up by 22%. So the question is it still worth it at that price? And the answer is maybe. And this is where it comes down to whether you are happy with the solution that you have. Is it doing what you need it to do? Are you generally pretty well versed in it, that it is pretty easy for you to use? Is it making your life easier, or is it making your life harder? If you really like QuickBooks and you are utilizing a lot of the different tools that come with it, it probably does not make sense to change. QuickBooks Plus, for example, is going to be going up by a total of $300 per year, which isn't great, and I don't love that, but for the grand scheme of things and the effort it would take to switch, it may not be worth it. Again, though, that's only if you're happy with it. If you haven't been happy with it, or you just don't like QuickBooks in general, then this is a great time to think about whether it's still the right solution for you or if something else might be a better fit. And here's what I'll tell you. QuickBooks is counting on you having the attitude that it is too difficult to switch. They are very well aware of the headache of going from one system to another. And in fact, they purposely make it so that it isn't super easy to do. And if you don't believe me that this is a calculated move by QuickBooks, I'm going to show you an article that I found in Yahoo Finance with an actual quote from the CEO of Intuit. So ultimately, this tells a little bit about what happened. This is talking about 2025. But what I thought was really interesting was this statement by the CEO. It said, every time we do a price change, which every year is pretty much how often this has been happening, we realized that we were too conservative, meaning they didn't raise prices enough. But customer attrition ends up being below our expectations. That means that they expected a certain amount of people to drop off, and less than the number they expected in their calculations and their models actually dropped off. So what this is essentially telling QuickBooks and Intuit as a whole is, hey, people aren't going to move. They might talk about how dissatisfied they are, how they don't like QuickBooks. They might go online and complain on Reddit threads. I've seen a lot of them, right? But at the end of the day, we got them. They're not going to move. And I think that this just shows you the mentality of this. Price increases are going to continue to happen so long as they don't affect the user base, right? So much that it offsets that revenue increase, it's going to be better for them. And QuickBooks itself has 80% of the market share. It will be hard for them to grow in terms of number of subscribers because they have such a huge market share. And I actually was looking back through their annual filings and noticed that they actually no longer even talk about how many subscribers they have on the platform. That is not a key metric for them anymore. Instead, they talk about revenue, they talk about pricing, but they aren't even worried about the number of subscribers. And something tells me they also realize that subscriber numbers are going to drop, right? And they don't necessarily want to be showing that to investors. And so instead, they're going to talk about revenue growth and profitability growth, which again, are not coming through new people signing up for the product. They are coming through these continuous price increases. And because I'm a numbers nerd and I wanted to dig in a little bit more to kind of see the motivation behind what they're doing, I jumped into their most recent filings. So this is their 10K from September of last year, which is the most recent annual filing they had. But you can see how things have changed, right? We went from $8 billion in revenue to 9.5 into 2024 to 11 billion plus in 2025. And when you drill into that, you can see that a lot of this, and this is just for their global business solutions. They make even more money than that because they own a lot of other different brands like MailChimp and Credit Karma. But this is just global business solutions, which is ultimately what they're now calling their QuickBooks segment. So if you come down, you'll see just how much this has increased, right? Like this is a massive increase over a short amount of time. And what's happening to profitability? Well, that's increasing significantly as well. So when you actually do the math, you find that revenue increased year over year from 2024 to 2025 by about 16%. And then when you come down to operating income, so that's going to be your revenue minus your related expenses, right? Then you can see that we've actually had an 18.5% or so increase in operating income. So operating income increased by more than what revenue increased. What does that mean? That means that these price increases are not just them pushing down the costs that have increased to the company. So a lot of companies say, well, cost of labor has gone up, all our different costs of our supply chain have gone up, whatever it is that they say to justify increasing prices. That's not what's happening here. Their profitability is increasing, as are their margins. So the goal for QuickBooks right now seems to be less about making sure customers stay and are happy and more about increasing prices, rolling out new services that they can monetize, and counting on people to stick around even when they aren't happy. So does all of this make QuickBooks and Intuit evil? No, this is what companies do. They want to increase their profit and increase their profit margins and add share owner value. I worked in Fortune 500 corporate accounting. I know how it goes. A company's goal at the end of the day is profit. But this, I think, is where we as consumers, if you are one of the people that isn't happy with the direction that QuickBooks is going, need to step up and show up with your wallet. Because at the end of the day, unless they start seeing a lot of people leaving, right, they're going to continue to do this. Just like the CEO said, they always see less than they expect in terms of people falling off whenever they raise prices. So they're going to keep doing it. So that means instead of just stewing about it and being mad, it's time to take some action and determine what the right solution for you is. And maybe it truly is QuickBooks and you just need to bite the bullet. And that may be the case. But if you're curious what other accounting solutions exist out there, and if there's something that might be a better fit for potentially less money, then definitely go check out my accounting quiz. I made this specifically to help people make this decision. And so I have taken my favorite, some of the biggest names out there in terms of accounting and bookkeeping software, and created a 2-minute quiz that you can take that talks about what your priorities are. What features do you actually need, and which ones are you not going to use, and therefore you don't need to pay for. You can take that quiz at the QR code that's on the screen. The other great thing about this is that at the end of the quiz, I also give you special partner deals that you can't find in other places, but you have to take the quiz in order to get those. And at the end of the day, the quiz may tell you that QuickBooks Online truly is the right solution for you. Or it might recommend something different like Xero or FreshBooks. Now, personally, after doing lots of research and actually bookkeeping in multiple different systems last year, I ended up switching over to Xero. And for my business, it was a great fit. And if I'm being honest, even for me, it really was a longer time than I should have taken to decide to make the switch. Because even I didn't want to deal with having to go from one system to another, learn a whole new system, figure out how to transition my data over, right? And that is why when I did it, I actually recorded the entire process so that I could show you how to do it. So if you're curious on how to move from QuickBooks to another system, you can check out this video. I'm specifically walking through how to do it for Xero, but a lot of this will apply to other systems as well. And at the end of the day, I was able to do it in like 60 minutes, and I wish that I had done it sooner. Now, a lot of people also mention the fact that they can't move software because of their accountant, and QuickBooks is what their accountant uses. And I will tell you, as an accountant who is very plugged into this world, a lot of accountants are also frustrated with QuickBooks, in part due to price increases, in part due to other things as well. So I have personally seen a huge pickup in the amount of accountants who are really looking at other solutions. And so if you do raise your hand and say that you're interested in another solution, it may be the impetus your accountant needs to really start to diversify. So to sum it up, when should you be looking at potentially switching from QuickBooks? Well, I personally wouldn't do it just based on price alone. It's really about how you're utilizing it. So if you're on either QuickBooks Plus or QuickBooks Advanced, but you're just not using the features to justify the price, then that may be a sign to either downgrade to a different subscription level or potentially to look at other options. Or maybe you're a solo business owner with a very simple structure and you don't need all the bells and whistles that QuickBooks has. Well, there are other solutions that often are cheaper and you don't have to pay for things you're not going to use. Or if you're just totally frustrated, maybe you've been frustrated with QuickBooks for a while for various different reasons, and this price increase is giving you the motivation to go ahead and figure out a new solution. If you fit into one of those categories, then again, definitely go take my quiz to make sure you know what the right solution is for you. Doing this now in the middle of the year is actually a great time to switch because you have time to get up and running on the new system before you get into tax time. So don't think you need to wait for the 1st of January to make a move like this. But it's worth it to say, if you're happy with QuickBooks and haven't really run into many gripes with the system itself, it may not make sense for you to move. It may not be worth the effort to do it. So I think those are the things you need to weigh when you are deciding what to do now. Whether you stay or go is going to depend on that value equation, so sit down and spend a little bit of time analyzing it. If you found this useful, make sure to share it with another business owner that might also be dealing with QuickBooks frustration. I know that a lot of you are out there, and thankfully you are not stuck. And if you want to know more about my journey, make sure to watch this video next, which talks about exactly why I decided to switch from QuickBooks to Xero. Thanks for joining me. Please make sure to like and subscribe, and I'll see you next time.